All right, guys. We are here today. We got PCE inflation data going live in about an hour and 10 minutes or so. I forgot to schedule the stream last night, but PCE show is here. Um, yeah, looking at stocks to see kind of what everything looks like today. Uh, let's take a look. We got the NASDAQ here at 2060s. We got the SPY 586s. We got gold up there, 2080.76. NASDAQ slightly red. A lot of this is flat. I think the whole market's going to be waiting for this data to come out, to be honest. It's very possible we get like choppy activity leading into this. What kind of genre should I play? What do you think? What's up, Pawn? Is the correction here? I don't know, man. Yeah, yesterday we were streaming. So yesterday we were on Top Step TV right at the end of the bell. Yeah, bro. Red. Like, we ended up making some money, too. Shorting. I couldn't get myself to go long. I was trading with Dolby. And him and I both made some money on the short side. You can kind of see my stats here. We made a few $100s at the end of the day yesterday. Hey, look. Oof. Yeah, these are my stats. 40, 35, 42, 51. So about 170 bucks. Pretty good. No timer? Here, I got you. Yeah, we got about an hour and 7 minutes, give or take. Really, it's like an hour and 6 minutes and like 30 seconds. A little bit over that. Alright. Here you go. Look at the NASDAQ lows. What's up, Yash, Faye, Pi, Ty, Yair, ND, Messi, Mark, Arian, MV, Trading, World, Mayan, Pawn, Beach Bum, Wombo, Better, Distributed, AV, Fabio, Allen, Prey, Funny, Ray, Coffee, Backyard, Joseph, VWAP, Frank, Yowzer. What's up, guys? Good morning. Yeah, I think the whole market's kind of waiting for this data. This is a big report. This is a big report. It's not small. Yeah, these last few PCE reports have been massive, dude. And honestly, next week's pretty freaking busy, too. So next week we got non-farm payrolls, unemployment, jobless claims, ISM manufacturing data, and more. So we got a bunch of stuff. All right, so Bitcoin hit under 100K. It did. It hit 78K for a second. All right, guys, so this is the news today. All right, this is the news. S&P, 585 roughly on the S&P, right around 585s on the SPY. 585.05, 586. Previous closes at 585.05, down 1.6%. Up a little bit though right now, so we'll see. The Dow stands at around 430s, down about 0.5%. The QQQ is at just about 500s. Kind of low, to be honest, for the QQQ. It's been one of the most affected by all this stuff. If we take a look at the 30-minute chart, this is the 30-minute chart of the Q. And I mean, listen, guys, I'm not going to tell you I told you so about the correction. You know, hopefully it shows not just bullish traders that you can't always be bullish, but bearish traders that there's a time and place to be bearish, you know. Like, you got a lot of people that tell people that we're going to crash. Like, it's just the wrong times in the market and the economy and everything like that. People said we were going to crash years and years and years ago. And, you know, they just kind of wildly overpredict crashes. I've been very bullish for the last, like, 4 years, 3 years, right? Only recently, over the last, like, 3 months, have I pivoted to, like, a more careful approach in markets. I've stopped buying things. I'm not really interested in buying up a lot of things. People ask me why I didn't buy Palantir. And again, the reason is because the market was up 105% in a few years, and that's just not sustainable. It's just not. Even with the market edge being on the upside, you know, 105% on the NASDAQ is just obscenely high. It's got to correct. It's got to pull back. And at least once a year, we do pull back. We do correct at least 10% usually. At this point in time, we've dropped, I think, around 7%. So this might be that 10% correction that we get. Yeah, so we dropped from 541s to 500s. That is a 7.5% drop. So we're on our way. We drop another 2.5%. That's a 10% technical correction. So we're close to it. Yeah, market's actually red this year. Let's do a poll here, huh? Does core PCE inflation come in higher or lower than the let's see, all right, guys, the E-mini, I mean, the E-mini's not that down. Let's take a look at some blue chips. Google rebounding a little bit today and needed to. Still slightly green. Microsoft is basically flat. Apple. Take a look at that. A lot of stuff is really flat, to be honest. So we got like Meta. Meta's green. What else we got? We got Meta. I can put like Palantir up here. Palantir's all the way down to 82s, guys. This is what I try to say. Like, there's certain stocks where the edge is just not in your favor to buy it up after a specific point, right? Like, after a specific point, Palantir obviously was extended. I think people ask me why I didn't buy Palantir, why I'm not interested. I made money on Palantir when it was cheaper. Once it started hitting hundreds, PE ratio is just too high. It doesn't make enough to justify being that price. And analysts look at how much it makes versus the price, and they judge whether they should buy or sell. And when it gets to be that freaking high, you know, what happens is this, right? It gets to be a really high point. Like it has momentum, and momentum can stop. You know, momentum might just continue pushing. But once some sales start to come in, people get nervous, and people see the sales coming in, they start to sell more. They see the sales coming in, they start to sell more, and then it starts this snowball-like effect where all of a sudden everybody just starts unloading. And that's what's happening with Palantir right now. It might get bought up long term, but short term, who knows where it's going to stop. But yeah, we got Google, Apple, Meta, Palantir. Obviously, we got to watch NVIDIA, maybe AMD. NVIDIA is actually red on the day as well. It's in the teens now. Amazon at 208. Netflix decently under 1,000. So this is a correction, almost a correction at least. Let me save this setup. All right, guys. So yeah, core PCE year over year measures smooth out short-term volatility and provides a clearer trend in inflation, making it the most important metric for the Fed's 2% inflation target. So we're watching. Oh, sorry, I bumped my mic. We're watching 2% year over year, or we're watching core PCE year over year. That's one of the most important things. Again, PCE data, the Fed's preferred inflation gauge, showed 0.3% rise in January, 2.5% increase year over year, slightly down from December's 2.6%. Hold on. Gotta correct AI. But yeah, PCE data comes out today. It's expected at 0.3% month over month, 2.5% year over year. And again, the big one is core PCE. Core PCE inflation is the big one that you want to tune into. Core PCE, the big one. That's the one you want to watch. Looking at our poll numbers here. It depends. Whether you want to trade the micro E-mini and the micro NASDAQ, it's 100% up to you. It's all subjective. Depends on your risk tolerance. Bro, I'm telling you, GDP freaking lags, bro. So I lowered the bit rate I needed to stream. I think my internet can probably handle. The last time I checked my internet, I'm running at over 1,200 megabits per second up and down. And so I should not be lagging at all. But I lowered my bit rate because the earnings thing was like tripping me out. I don't know why. Should I raise my bit rate back up, you think? I know my internet can handle it. My video bit rate, I have it at 3K right now. But I think we can handle a little bit more. I'm going to put it at like 36, 37. A little bit lower than I've been having it. There we go. It'll just make it a little bit cleaner stream. All right, guys. So yeah, scheduled for release today. PCE is the Fed's preferred inflation metric. Analysts expect a 0.3% month-over-month increase for January, year-over-year rise of 2.5%, slightly down from December's 2.6%. It suggests a modest cooling in inflation, but is unlikely to prompt immediate interest rate cuts. GDP came out yesterday reporting a 2.1%. Bro, this is where AI gets it freaking wrong, bro. AI, dude, get it right, bro. We didn't post 2.1% yesterday, dude. We post 2.3%. You're wrong again. I gotta tell AI you're wrong. I gotta chastise it like it's a child. Like, hey, dude, where are you getting this information from? Like, check the accuracy before you spit something back to me, AI. Come on now, do better. Are we lagging, by the way? I don't think we are, but let me know. Yeah, dude. 5 to 6K. Let me ask AI this. AI might not be the person to freaking ask, but we'll ask it anyway. Once it stops lagging out for some reason. Let me exit out of some stuff here. Help AI get it together. I'm pretty sure I have an external. Oh, I've got. I don't know, man. Actually, like my last custom PC, I had like 64 gigs of RAM. I added a couple sticks to it. I don't know if I've done it to this one yet. Let me check. I don't think I have, to be honest. I might need to add some RAM. This system has got 32 gigs. I should be fine though, to be honest, but I might want to update that. That might be something that helps me here. Expected PC is 0.3% month over month, 2.5% year over year. Hello, McFly. Like, I'm gonna have to exit out of AI, dude. Maybe like use it on a different screen or something. Refresh it. Did we just lag out? Oh, bro, I'm exiting out of here. Yeah, I probably only need 2.5%. All right, I just exited out of here. Because we had 530 people here, and now it says we only have 490, so that's weird. All right, guys. Palantir breaking down this morning. So it was NVIDIA here, guys. Look at NVIDIA. And then look at Palantir. Look at NVIDIA, guys. NVIDIA's dumping down here. It's at 118s, 118.50s. You provide great content and life advance. We try over here, dude. We really do. Like, I try to give people information that would help me. People are strange, though, bro. Like, there's a couple things that I realize that people do. I realize this stuff from, like, my kids' parents. My kids' friends' parents. Is that some people resent, like... Some people resent youth. And I'm not even super young, but I'm younger than a lot of my kids' friends' parents. And they are just weird. Just strange. All right, look at NVIDIA. NVIDIA at 118.20s. How realistic is it the PC to come better than expected? Grok? I could try. All right, sorry guys, I am typing up a... All right, sorry guys. I'm asking. Let's see what the post is. I'm testing Grok out here. This is the blueprint. I said every day I want you to look up the latest finance news in the U.S. I need it to be accurate and have this blueprint. Economic data releases both expectations for that specific day, like core PCE, as well as the stock, as well as how the market reacted to the results from previous days. Stock news in the U.S., big news, earnings, and how the market has reacted to that, plus big economic news like tariffs and more. Make it accurate in bullet point style. Include tags. You know. It is faster. All right, guys. So again, we're going to post this live here as we always do. Negative for PCE. Yeah, looking at our poll, we got 66% that say higher than expected, 34% that say lower. Interesting. All right, so again, the second estimate of quarter 4 GDP was released yesterday, 8:30. MarketWatch reported real GDP growth at 2.3%, matching the advanced estimate, aligning with consensus. Some expected a slight downward revision to 2.2%. Steady growth reflected consumer and government spending gains, offset by weaker investments. Stocks waved post-release. The S&P dipped 0.2% intraday, but closed flat as the no surprise GDP failed to offset tariff fears. The market dumped yesterday. What is this talking about? Didn't the market dip a lot yesterday? Yeah, dude, the market dropped from 595 down to 586. Yeah, so I think I finally got one. Yeah. All right, so again, the president's looming 25% tariffs on Canada, Mexico, and 10% on China. Is it set for March 2nd or 3rd? Huh. See, Grok just isn't accurate. Like, it's less accurate than like GPT-4o or stuff like it. Like, I've had to correct it about 5 times now, unfortunately. Yeah. Yeah, so yesterday's sell-offs suggest market is pricing in higher costs, 2,600 household annually per personal. Peterson Institute estimates. Fed's PCE focus could shift the sentiment, though the rally, the moves down are really obvious right now. I mean, everybody sees this red brutal action. We got 45 minutes, chat. 45 minutes. We got over 700 people here already. This is a big report today, man. It's a lot of stuff going on economics-wise. That's what I'm saying. Like, regardless of who you like politically or not politically, I don't care about any of that stuff. I really don't. I'm looking at the accuracy and the efficiency. One thing, like, Grok freezes less, but it's less accurate, right? So it's faster in reporting the information, but it's less accurate for sure. And so I'm going to stick to GPT probably, just because it's just less accurate. I should try Gemini. Yeah, guys, here we go. We got 45 minutes exactly. Is it time for a dip, dude? I don't freaking know, man. I can't find it in my heart to trade against the trend right now. Like, I would normally be like, hey, we're super extended on the downside. Let me buy this dip. I can't really feel that right now. I can't really feel that. Like, that's a little too, I don't know. I don't freaking know, man. Core PC expected today at 0.3% month over month, 2.5% year over year. Release live here at 8:30. Sub to chat. Y'all like the music today or no? It's a crash, not a dip. I mean, what do you define as a crash, Herbert? Or in Louisiana, we say a bear. What do you define as a crash, sir? Because to me, a crash is a very quick 25+% drop, 25% drop. Right now, we are down 7.5%, give or take, depending on which one you look at. So 7.5% is definitely not a crash, but I guess it depends on your definition. What's up, Goose? Given you already took the recent losses and what? Who did? I made money yesterday. Yeah, we'll see. We'll see. All the signs are pointing to a crash. Yeah, but I think it's way too early to predict that. I think it's way too early to predict it. And again, this is coming from somebody, if anybody's been watching my stream, you guys know starting in around November and December, really December, I stopped buying up stuff. We were up too much. I stopped buying up stuff in like December. We were just up too much. I thought we might correct sometime this year, and that's kind of what we're doing. I'm not going to say I told you guys so, but this is what happened. Like, we're starting to correct. Now, that doesn't mean we crash. There's a big difference, right? And the biggest edge long term is on the upside anyway. And so we've only had a couple times in history of finance where we've bear trended for longer than a year or two. And so even with that, like, we're down on the year slightly. It's still too early to call it. I think it's way too early to call it, because, like, okay, we don't have economic weakness yet. We don't really have like inflation problems yet. Like, things are pretty cool on that end. Like, inflation's relatively low, the economy is reasonably strong, unemployment's pretty low. I'm not saying things are perfect. Inflation over the last 5 years is still rendering a lot of people unhappy, and so y'all might not understand why that can be true, while I can also simultaneously say, hey, the labor market is strong and inflation isn't that bad. Again, if you want me to explain that, I very easily can. You know, because sometimes when I say that, people are like, what, are you crazy, bro? You know, inflation is horrible right now. You know, and again, you got to understand economics and what this all means. What inflation I'm actually referencing. Bonds. Matthew, bonds. I'm not telling you to buy anything. I have no freaking idea what's going to happen. We got almost 1,000 here. We got 40 minutes left. 40 minutes. All right, guys. Hey, we got 40 minutes, less than 40 minutes really here. Y'all be ready. All right, guys, so again, we are bouncing back a little bit. Let's see if we can draw some levels around NVIDIA. I'm curious to see when this whole bear action stops. NVIDIA hit 117. That's very, very, very freaking low here. I didn't see it, Sam. Whew, what a bloody freaking few days, dude. Yeah, I don't see it, Sam. Maybe repost it at the bottom if you want to check it out. 25%. Yeah, so China tariffs are now 20% plus now, which is crazy. Meta dipping down. Meta's been one of the biggest reasons the market's down is Meta. Look at Meta. Meta was at 7 something. It's now at 650. This is a big. It was at 740s. Look at this percentage drop in Meta. So Meta is that some of the biggest losers in tech right now. These are the stocks that are really dragging everything down here. Meta is down. Meta is down 11%. Okay, Meta is down 11%. Tesla, on the other hand, is down 44% for Tesla. Tesla is down 44%. Palantir. Again, some of the biggest losses in tech. Palantir is down 34%. NVIDIA from highs NVIDIA is down 24%. All right, Microsoft down to under 400s right now, under 400s. All right, Microsoft is down from its recent highs. %16 from recent highs for Microsoft. So yeah, a lot of big drops, big drops. So, do you guys think any of these are justifiable to buy the dip? Any of these you think it's time to buy the dip? We got over 30 minutes left. Yeah. All right, guys. So again, we got craziness going on in markets right now. Craziness, bloody red markets. I want to do a poll maybe later on that asks, you know, what we're gonna get. All right, chat. All right, we're at 8170, 8170. The Q at 500s. The SPY slightly over the VWAP and 200 exponential moving average here. We got 30 minutes left. Ooh, we got over 1,000 people here already, so that means this is going to be a big release. If we got over 1,000 people here already, that means we'll probably have over 2,000 people by the time this report drops. I'm hoping we have 3,000, but I mean, maybe I can hope all I want, but you know, but yeah, this is a big release. Yeah, you were the one pushing the X.com when it's bad. Again, I just didn't like it. I mean, it's okay. It's faster, but it's not accurate. It's the problem. If you guys have any good GPTs, let me know. You know, Bitcoin and Nvidia from the past 3 years of DCA, not at all concerned. Yeah, I mean, I think long term is fine. The only one that I'm worried about is Bitcoin. I think Bitcoin obviously could do a couple different things. Bitcoin could keep dumping and really freak the crypto market out, probably get some buys eventually and bounce back, or it could stabilize over 80K, continue to make a push towards 100K and just kind of blow the shorts away. That's possible too. Anything could happen there. But Bitcoin, I think, is the least predictable out of all this stuff. I don't think Bitcoin's predictable in that way short term. Long term, very predictable. Short term, who freaking knows where it's going to stop tumbling. Yeah, Baba. Yeah, I was in Baba too, to be honest. I bought Baba at like 90s. I ended up missing most of this run, though. I ended up getting out at something cheap. I made money, I think, but still. Nvidia, again, still looking very weak, guys. Palantir down a massive amount here. Massive amount. Shout out to everybody on our Discord. Yeah, I mean, Bitcoin's over 80K. Yeah, it's been over. I mean, it only hit 117. Or, I'm sorry, Bitcoin only hit 78s for a little while. It rebounded back pretty quick. I don't know what number I said. If I said the wrong thing, my bad. But yeah, Bitcoin over 80K, right? Bitcoin futures, at least. Bitcoin's currently at 81s. AMD big jump. Is AMD up? No, AMD a big dump is what you mean. Yeah. I mean, AMD's testing that $100 level, which is a big milestone level here. Get ready, guys. Get ready. Oof. I wonder how people predict such downward moves. I mean, I don't know about short term. I told you guys in December I stopped buying, and I thought we might correct. And you know, how did I know we could correct a little bit? Extension mania. The best way I can describe it is mania, right? There's a couple different things. I look at the amount that we've run over the past few years. So extension is number one. I look at like people's mindsets. Like I had people I know telling me that there was no way the market could correct, that the market just can't correct anymore. Like that the market's too strong, that people are buying too much stuff, that a market can't correct. I know people that actually said this. That's obviously wrong. So mania. 2. And then growth can't continue in this way. High PE valuations, you know, earnings coming out. Economic reports showing a little bit of slowdowns in areas, right? Like there's a lot of things that can precede big corrections. And again, even with that, I don't think the accuracy is like super high. I know there's a level at which I don't feel comfortable buying up stocks anymore. I feel uneasy buying up stocks after a certain amount of, you know, runs. And we were certainly there. Again, the Nasdaq's at 105%. It's not a shocking thing for us to correct, I don't think, right? Like, it's not even like a good prediction. It's not even some powerful thing like Nasdaq at 105%, averaging over 50% in 2 years. That's a ridiculous amount that it's not sustainable. It's never going to sustain that. It's just not, it's not how the market works. If the market worked like that, everybody would be rich. But unfortunately, it doesn't work like that. And, you know, it's not sustainable to put in 100% in 2 years and hold most of the time. Well, yeah, all this stuff is going to be up all this stuff's going to be up in 50 years. In 50 years, none of this freaking matters. All right, we got about 1,200 people here already. We still got almost 30 minutes left. Rocket Lab dives after earnings. Didn't we have we had SoundHound earnings yesterday? SoundHound has lost a lot of steam, and they didn't really react to their earnings. They popped up a little bit. Now they're fading down into the into pre-market. Amazon up a little bit today though, so Amazon's back over 209s. So let's see if it holds there. Yeah, PCE coming out in 24 minutes, guys. 24 minutes. Personal consumption expenditure index drops at 8:30 Eastern Standard Time. 8:30. Will the bloodbath continue? Nvidia. Gold. Gold's down too, which means like economic uncertainty. Gold on downtrend for days, coming from new highs. Looking for a sale today. Bruh, PCE data comes less than, will it be bad for the economy? If PCE comes in low, it means inflation's getting better. Now, maybe it means some lack of consumption and other stuff, but generally it means inflation is getting better, and the market will most likely react positively to it. I think the market wants lower inflation right now versus high inflation. Sorry, here I'm putting my trading up here. Again, let's draw some stuff. Dude, I hate Windows 3, bro. Windows 3 is the worst, dude. Or Windows 11, I mean, I'm sorry. Windows 11, the freaking worst, bro. This is horrible. How they can even operate like this is stupid. All right, guys. 20 minutes. NASDAQ down. Yeah, higher inflation means they're not going to cut rates just quite quickly. So the market doesn't want higher rate cuts. Or no, I'm sorry. The market wants rate cuts. They do not want higher inflation. If inflation, okay, so this is the way it works. I'm going to explain it right now so everybody can get a good grasp and understanding of it. We still got over 20 minutes left. Now, the Federal Reserve influences interest rates. Now, they influence what's called the federal funds rate, and the federal funds rate eventually trickles into everything else. Okay. Mortgages are a little bit of a different animal. You can watch bond yields, and they're influenced by a lot of different things. But interest rates are influenced by the Federal Reserve, specifically the federal funds rate, which is short-term rates. Eventually, long-term rates follow it. These directly influence home equity lines of credit and adjustable rate loans and mortgages and stuff like that. Now, the Federal Reserve, their job is to keep it balanced, right? If they keep rates too low for too long, the consequence might be inflation, right? Because the logic is that when people have cheaper access to money through low interest rates, they tend to spend more. Now, this can obviously make a lot of people happy having low interest rates, lenders, home buyers, stuff like that. But again, if it's too loose, inflation can happen. And if it's really loose, like if something really bad for the economy happens, if the economy looks very, very weak, the Fed can step in and do a more emergency type of thing with what's called quantitative easing, which is basically just them injecting liquidity. They create online bank reserves and then use that to buy up bonds and other financial assets, and that just injects liquidity into these markets and ultimately props up the economy through lower interest rates, access to lower interest rates from the banks. But the consequence of all this economic stimulus, like an example was 2020. 2020, we got quantitative easing because we were in some crazy spot. People weren't working, lockdowns, all this crazy stuff was happening. The Fed stepped in. They lowered interest rates to almost zero. And then they did quantitative easing, like injecting liquidity into the markets. The consequence was inflation. But the consequence, number one, was that we rebounded a lot faster than a lot of people thought we would. And again, you can kind of see, here's 2020 right here. If I put like a 5-year chart up, here's 2020 right here. You can kind of see the Fed brought rates down to almost zero, and they maintained them there until January of 2022. Right, they also did QE, injecting liquidity, trying to prop us up and save us from the incoming recession and depression at the time. They also sent out stimulus checks, which is even more economic stimulus that might contribute to high inflation. And so again, by keeping this dovish stance, this is the Fed being dovish here along with QE and stimulus checks. This is a dovish Fed, a loose Fed that wants to keep interest rates low. The consequence when we look at like CPI inflation, PCE is what we got today, but the consequence here, if we look at like another inflation metric, is inflation spikes, right? So even if we look at CPI inflation, which you can kind of see what happened following the low interest rate environment, we got this move right here. Inflation spiked up to almost 10%. And this specific move right here, right? Like this move right here is why most people, modern age, are still unhappy today. This move right here. You want to know why people still think we're in shambles? Is because of this right here. 10% inflation spike. You can see that's higher than we've seen over a 20-year period. Like inflation hadn't spiked to anywhere near those levels in 20 years. In 2020, in 2022, inflation started to spike. And the reason it spiked, well, number one, supply chain restraints from 2020. Quantitative easing, injecting liquidity, money printing always can make inflation worse. Low interest rate environment. The Fed stepped in and brought rates down. And so then what does the Fed do? What's the Fed to do in this situation? Well, they got to raise rates. They got to hike rates. It's called a rate hike. They raise the federal funds rate. And the logic of this is that if they can keep interest rates high, it discourages people from spending as much. And when you discourage people from spending as much, businesses lower prices to compensate for it in theory, right? And so here's the federal funds rate getting raised up following, the inflation spike. So in January 2022, they raised the federal funds rate. This is a rate. These are rate hikes is what they're called. A hawkish Fed that's raising rates. And then starting in about August, or no, when was this? When did they start pausing? They started pausing in August of 2023, and then in August of 2023, they paused rates for a year straight. After this pause, where things basically stayed flat, we did see CPI inflation, PCE inflation start to decrease and go down, which was their goal. But this is why you also have people saying, oh, rates are so high. You want to know why mortgage rates are freaking sky high right now. You want to know why rent is high. All this stuff is high because of this right here, the rate hikes that the Federal Reserve did. We only recently started cutting rates late last year. And again, now the question is, when are we going to cut rates again? Analysts are expecting the next rate cut to be June, July. So we still got some months to happen before the Fed starts to cut rates again. You can check things like the CME watch tool to try to figure out, what the Federal Reserve is going to do. This percentage has actually gone down a little bit. So look, 94% now, 94.5% to 5.5%. So the likelihood that we're going to cut rates is now at 5+%. That's much higher than it was. It was at 97. It was at almost 98 to 2 yesterday. Now it's at 95 to 5 basically. So the likelihood of rate cuts next month has gone up. Let's see if the date has changed according to these analysts here. So if we look at next month, or not next meeting, but the meeting after, is still pretty probable. Almost a 30% chance we cut in May. In June, yeah, so now it's looking, instead of June, July, it's looking May to June is when we're going to start cutting rates back down. Looks like 25 basis points is overwhelmingly expected. So again, let me know if you agree with that or not. Let me know if you agree. But that's why all of these conditions make today's PCE inflation data incredibly important. Why? Because if inflation comes in hot, the Fed is going to be less likely to cut, because cut stimulates the economy and might make inflation worse. And if inflation's already a problem, they're going to be really, really careful not to exacerbate that problem through more rate cuts. If inflation is under control and at a reasonable spot and we see economic weakness, that's a situation where the Fed might pivot to more earlier rate cuts. But that's what we're looking at now. And again, all of these are, in the environment of a really weak market over the last couple weeks. The market's turning down. AI sentiment is going negative. Tariff fears are making people fear inflation even more, because how all of this correlates to what's going on right now is tariffs. Tariffs are very well known to potentially make inflation worse. And so if inflation gets worse, what's the Fed going to do? They're going to be less likely to cut early. And so we'll see if today's inflation report has any type of, movement along with the crazy tariff stuff that's happening. And again, today they're expecting 2.5%. The Fed's inflation target for core PCE is 2%. So today we're expecting 2.5. Their target is 2. We'll see if we can hit it. Hey, thank you. Somebody sent me a donation. I missed it. I was going through economics. Laced, how long can it go? It's in the 2 and 3s. If it turns negative, then we have a problem the market don't want. How long can what go? Yeah, I don't think we're going to do QE. I don't think QE makes any sense right now. In fact, the Fed's actually doing what's called quantitative tightening, which is the opposite of QE. All right, the Fed's doing QT right now, which is, if QE is injecting liquidity, trying to keep interest rates low, quantitative tightening is the opposite. It's the Fed reducing their balance sheet, not supplying liquidity, and ultimately trying to keep inflation down is what QT is doing right now. So again, the Fed's not going to do QE right now. I don't think so, at least. But again, we're going to stream the Fed meeting next month, and we'll see how that goes. I'm pretty sure the Fed's going to cut this year. The only way the Fed wouldn't cut is if inflation spikes. Most analysts, listen, you get all these people that expect all these wild things. If you want to know what the Fed's going to do, look at this 30 minutes before the next Fed meeting. You'll know. But it's pretty probable that we cut rates this year. I think that's a good question, though. Maybe it's also possible we don't. A situation in which we wouldn't cut rates this year is if you see inflation spike and the economy boom, right? Payrolls come in strong, unemployment comes in low, GDP shows up high. inflation shows spikes, that's a situation where we're not going to cut rates. That's a situation where we wouldn't cut rates. It doesn't justify it. The situation in which we would cut rates, which is what the market wants right now. Don't get it twisted. The market wants lower rent, lower mortgage prices, lower interest rates right now. It absolutely does. But again, a situation in which we would not cut rates this year would be if, again, payroll numbers popped, GDP popped, unemployment went down, inflation spikes. Right, those different conditions might make the Fed much less likely to cut rates, but it's a case-by-case basis. The Fed's very data dependent is what they call it, which means that they're basically just kind of waiting for the data to come out before they make any big, bold prediction. All right, guys, we got about 12 minutes left. What stock do you use to gauge what the Fed might do? I mean, I don't know if there's a stock necessarily. You can look at the yields. And again, if you want to follow kind of like interest rates, look at yields, right? The 10-year yield can tell you what interest rates are going to do. So again, you saw the percentages recently drop from 97 to 95% likelihood of a pause next meeting. The reason this drop, you can see yields fall as well. So yields, 10-year yields right here have a positive correlation with interest rates, meaning if yields are dipping down like this, interest rates, it's a more dovish sentiment. And vice versa, if yields are spiking, it's a more hawkish sentiment. And so you can kind of follow the sentiment of interest rates through bond yields and what might happen there. But it's definitely not a perfect science, and they do fluctuate a lot. You can look at the CME watch tool if you want to check to see the current probabilities on rate decisions. And another thing is, like, listen, guys, every single time the Fed does a decision, you got somebody here and elsewhere that just makes these wild bets. Like somebody betting that we're going to cut rates next month when it's at 5%. And again, every time they're wrong, but I don't know if they're just trying to be contrarian or they really just have no idea about economics or Fed policy. But look at the Fed watch tool. This is big money analysts. They know what the heck is going on. Like if 30 minutes before the Fed decision, it says there's a 95% chance likelihood that we're going to pause, you best believe we're going to freaking pause. Don't listen to anybody that tells you people that don't understand it. They typically do one of a couple different things. They look at really old Fed sentiment. So they look at like what Jerome Powell said 6 months ago, and then they use that to base their predictions today off of, even though if you've been paying attention to the meetings in between then, he's completely changed his tone and his sentiment and his decision making. But for whatever reason, they're like holding on to something he said 6 months ago, and they're trying to use that to gauge direction. That's wrong. You want to look at the Fed watch tool. I can't guarantee anything's right, and it's always possible that we do something outside of these expectations. But these analysts know what the heck they're talking about. This is a very commonly used economic tool. So just know what it is. Look at the NASDAQ dipping down ahead of PCE inflation, guys. We got 10 minutes left. 10 minutes. Yeah, for sure. Yeah, here's the Fed watch tool right here. I got you. There you go. What's your prediction for the data? Out of curiosity, I have no idea, man. I know people want my predictions because I've been accurate with CPI especially. I really don't know, man. I really don't know. I guess I think we're going to come in flat, but I think we're either going to come in flat or something tells me we might come in low. But that honestly might be confirmation bias, and I'll explain why I might have that bias in my head. The market's bloody red. Like, I want to see things that make the market rebound here. I don't want the market to keep dropping. Nobody should. I don't want the market to keep dropping. And so what can make this red brutal action stop on a Friday? Low inflation, right? And so it might be confirmation bias that I want inflation to come in low. But I have no freaking idea. Again, I'm not really accurate with PCE. I've for whatever reason I've been able to guess CPI right. I think I've got a lot of luck there. And I've guessed CPI correct, especially like the direction higher or lower than expected 8 out of 10 times in the last 10 months. Somehow. And again, you could back check the stream if you want. And I'm not sure how, but just for clarification, I'm not really good at PCE. I've never really tried with PCE, to be honest. PCE is a little bit different. Yeah. What do you guys think? High or low? Vote on the poll. Higher. 63% say higher. 47% or 37% say lower. All right, guys. Again, a lot of big tech bleeding right now. Market's kind of flat, though. So somebody's asking me the differences between CPI and PCE. PCE is the average change price in goods and services consumed by households in the U.S., tracked by the Bureau of Economic Analysis. Core PCE excludes volatile food and energy. CPI measures the price changes in a fixed basket of goods and services, typically purchased by urban households, reported by the Bureau of Labor Statistics. So PCE is more accurate. It measures the average price changes in goods and services consumed by U.S. households. So one is consumption data, which is more accurate to what we're spending money on. The other one is like a fixed basket of goods, if that makes sense. So PCE is dynamic. It adjusts as consumer behavior shifts. CPI is fixed. Its weights are based on static survey of consumer purchases. PCE is heavier on healthcare, lighter on housing, which is more accurate to spending patterns. PCE tends to run lower as well. So there's some differences. Overall, PCE is just more accurate. All right, guys, we got 2,000 people here. We still got 6 minutes left. Yeah, I mean, if it comes in high, I think it's going to make the market panic. I hope it doesn't, though. I really do. I hope it does not come in high. I'm genuinely wishing it doesn't. Let's see what we get. How will higher or lower affect the markets? Well, lower is lower inflation, higher is higher inflation, and the market fears inflation absolutely, at least to a certain extent right now. And so, yeah, basically, higher is worse, lower is better. And the market's dipping ahead of this too, guys. All right, let's get ready here. We got 5 minutes. 5 minutes. Here, I'm going to put some battle music on just to, you know. Do y'all like the music today, though? I kind of switched it up a little bit. I kind of switched up the music. I made it a little bit more relaxed. But today we got big inflation data coming live. We got over 2,000 viewers here. Can we break 2,500 today? We got 4 minutes left. I think we will, to be honest. I think we'll get close to 3K. I'll watch you on mute just to see your beautiful face. It's the haircut, bro. Listen, I got the haircut. I had him taper the back, too. So that's what it is. But listen, I know, man. Top 3 greatest looking investors / traders in the world right now. What are your trading rules for news releases? I don't trade them. That's my rules. I don't trade them at all. I might wait for the news to come out and then base a trade based off of extension or trends or something like that. I'm definitely not holding a trade through the news release. That's dumb. Variance is too high. Do you trade better with hat on or off? I don't know. I traded pretty good yesterday. I'm going to say hat off, but who knows? Definitely top 3 haircuts ever. I have a picture of you hung up on my wall. My wife doesn't like it. I'm sorry, bro. Listen, that's what I do here, you know. All right, guys. Hey, we're breaking down. 570s here. 570s. Three minutes. Okay, this is a little bit too happy, right? It's like frolicking music. It's like skipping to the grocery store music, you know? All right, guys, we got 3 minutes left. 3 minutes. Hawkish or dovish, guys. Hawkish or dovish. Hit the live next to the play button, guys. Make sure you're fully caught up on stream here, chat. Make sure you're fully caught up on stream. We got PCE inflation data going live in about 3 minutes. A little bit less than that, actually. Be ready. We got Chicago PMI at 945 too, but PCE data, we got consumer spending data as well. Retail inventories data, wholesale inventories data also going live. The market is fearing this too. Look at the look at the dumps here, chat. Wow. I don't know, like I know I said I thought it would come in a little bit lower as expected. But the market dipping honestly makes like, does big money know something that I don't here? Here, y'all gotta hurry up. I got data coming out like right now. I love you. Love you. All right, guys, we got 2 minutes left. 2 minutes left. All right, guys, we got a minute and a half left. Honestly, we might break 3,000 people here for this thing, dude. Y'all hit that subscribe button. Hit the notification bell, guys. I appreciate the love. Thanks so much. We got a minute and a half left. Here, bro, hurry. Hurry. I love you, dude. Have a great day, buddy. Love you, man. All right, guys. Here we go. A minute and a half left. I don't know if I'm feeling it. There's the horn. The horn and the music, I just wasn't feeling it. All right, guys, here we go. PCE inflation data going live very soon, very soon. Here we go. A minute left. 1 minute, guys. Hit the live button next to the play button. I'm going to put bond yields up. I'm going to put gold up on the charts. I'm going to put Bitcoin at the very bottom here so we can watch all of these. Okay, we got Bitcoin, gold, and bond yields. I think that's a good mix. Good mix. All right, guys, 40 seconds here. 40 seconds. Y'all be careful. 30 seconds here, guys. 30 seconds. We got over 3,000 watchers. $25 seconds. You guys ready? 15 seconds. This timer's a little bit early. We actually have about 12 seconds left. 5, 4, 3, 2, 1, and there's the report. Good trades balance came in at minus 153.26. Nothing yet. Nothing yet. The market hasn't moved. All right, there we go. It came in flat as expected. 2.6% versus 2.6% expected. 0.3% versus 0.3% expected. Everything was flat, basically, guys. Everything was flat. 2.5% for regular PCE. Core PCE flat. 2.6, 2.6, 0.3% versus 0.3%. 2.5%. Like, everything's basically flat on my end of the screen here. And the market's up a little bit, but everything's basically flat. We came in roughly flat. Some places showed 2.5, others showed 2.4% year over year. Or others showed 2.6. We showed up at 2.6% for year over year, 0.3% as expected, 0.3%. And so we were kind of right. I don't know if I can celebrate that as a dub, but we showed up at 2.6% versus 2.6% expected. The market likes this data though. It's going up for some reason. You know, the market likes this data here, guys. Core PCE. I'll put this big up on screen. Core PCE 0.3% versus 0.3%, 2.6% versus 2.6%. The market's loving this, coming back. Let's see if it holds. But this is a big bull action here, guys. Big bullish move. Bond yields haven't moved. Bitcoin spiked up a little bit. Yeah, interesting. Tech is bouncing. Meta's back. Palantir's back. Nvidia. What's Nvidia doing? Amazon's back. Nvidia's still red on the day. It's bounced back a little bit. I don't know if this is going to be enough to save us, but we're definitely green right now. Look at this huge freaking move, guys. Look at this huge freaking move. Wow. Stick around, though, guys. Do not leave. We are going to day trade the NASDAQ, the S&P, the Dow, maybe some gold, maybe some crypto at the open. We're going to start day trading right now. If you haven't already, check out TopStep. TopStep gives you a demo. They test your skill with a demo account first. If you want to day trade, do not fund thousands of dollars into your own account. Most day traders lose. Most pro day traders trade futures because you don't have to deposit thousands and thousands of dollars to get around the PDT rule like you do in stocks. Top Step gives you a 50K demo in the futures market. If you can make 3K in profit on that base one without losing 2K first, following their rules and conditions, they fund you 50K. You get to keep your first 10K in profit once funded and then 90% afterwards. Very similar to funding your own account. If you fail, it only costs $49, and so it's not the end of the world. It's much cheaper than depositing and losing thousands like most new traders end up doing. Instead, $49 a month. If you pass it, you get a 50K funded account, 90% split. If you're good enough, you can then, trade, make money, deposit, and fund your own account with the profits after you withdraw. It just makes sense, right? And they've paid out hundreds of millions of dollars, almost $200 million in 4 years. They fund thousands of traders. Been around for over 12 years. If you use Top Step X, zero commission as well. Tiny amount of fees per contract and zero commission structure. It just makes sense, guys. It really does. There's no PDT in futures. The patterns are very, very similar to blue chip stocks. And it's just a great way to learn how to day trade, considering most day traders lose. And I think most day traders are going to lose regardless of where they go. Frankly, it's a lot cheaper to lose here than it is most of the time than it is to deposit 10K and lose that most of the time at least. Again, understand CFTC 4.41. They're an affiliate of mine. I am biased because I get paid by them, not an investment professional. I'm not liable if you lose. Understand all these rules. CFTC 4.41. I have no freaking idea what I'm talking about, guys. But yeah, link is in the chat. Great way to help support the channel. The NASDAQ is up a pretty big amount from PCE. Look at the 200 exponential here, guys. So if you want to know a little pullback area, look at this 200 EMA right there. Pulled directly down to that 200 exponential. Let's see if it holds. I'm going to have to document some levels on this chart before I start day trading here, just because, to be honest, we're pretty freaking volatile. I'm going to put one right there. Let's find some more levels here that we can maybe use. I guess I got to use this high up here now too. We might have a little level here as well. Yeah. Let's look underneath us now. We got this spot there for sure. We got this low there. All right, I think that's fair. We also might have this spot right here too. All right, I think these lines are fair. All right, let's see if the bullish trend continues here, guys. Here's a question. Are you buying right now? Are you buying or selling? Yeah, the numbers are right here. We came in flat as expected, 2.6%, 0.3% month to month. What a lot of analysts expected. I think one of the analysts showed 2.5%, so in that regard, we showed up a little bit higher than the 2.5% number, but a lot of analysts also had 2.6%. So, all right, I ask people, are you buying or selling? Observing, holding, buy, sell, buy, hold, buying, shorting, hold, buying, I have a bit of cash, hold, observe, flat, sell, buying, John, all in, hold, I'm scalping, I'm holding, short-term bearish, buy. Yeah, so pretty mixed results. Does this craziness continue here, chat? Is what I want to know. Does this craziness continue? All right, chat. What else we got? All right, so we're still dipping down here. It's too early for me to make a decision. Yeah, I'm going to wait. Where's Bitcoin at? Bitcoin back up to almost 82K. Yields haven't really moved much. They spiked up a little bit here on inflation data. This data proves that the bull market will continue, but it'll be late next week. Next week, we have payrolls, which are a big economic catalyst, of course. Payroll numbers next week. Big. Again, this ain't all today, guys. We also have Chicago PMI dropping later on this afternoon. Important release for sure. Look at this spike here. So we are spiking right there. We bounced at that 630 level on the 200 exponential here. Guys, look at this spike. Broke high of the previous couple minutes at least. Let's see if it's a liquidity grabber if we continue. Again, if you want to check out Top Step and day trade with me, we are going to day trade a little bit today. I'm trying to find an edge here. What do you guys think? Like, I'm looking at some of these levels. This could be a liquidity grab. I'm going to prepare to trade. But again, there's no PDT in futures. You can day trade the S&P, the Dow, the NASDAQ, the Russell, gold, some currencies. again, most pro day traders trade futures. Like I stuck around trying to trade stocks for too long. In the futures market, I can basically day trade the SPY in the ES, which is the S&P E-mini. It's actually what the SPY tracks. I can also trade basically the QQQ, which is the NQ, which is what the QQQ tracks. Patterns are very similar to blue chip. If you're going to pay for a demo account with real-time data outside of them, it would probably cost in the same ballpark. But there's so much cool stuff that this gives you. And if you fail, they give you a free practice account with real-time data anyway. And so it's the best of both worlds. It's limited risk. If you lose, it's out $50. If you pass it, $50K funded account with a 90% split, similar enough to funding your own account. I'm going to put the link up one more time. Why is everybody saying F? Oh, was it frozen? Are we back? Are we back? Are we good? Hello? Mic check 1 2 1 2. Are we good? No, everybody's saying I froze. Did it ruin my top 3 greatest plug of all time ever in the world? Okay, we're back. All right, cool. No, we're good? Okay, cool. Yeah, guys, let me know. We should be good. Did y'all lose me for the last 10 minutes? I don't think y'all did, right? Most people caught the data. My video's good, it's just my mic skipping. Yeah, I don't know what that is. Sorry, guys. Yeah, we should be good now. It's only 30 seconds. Okay. Honestly, I'm running at like 1200 megabits per second upload and download speed. So I really genuinely doubt my internet's that bad. Let me exit out of some stuff. Maybe it'll clean it up. Yeah, is there really issues, guys? Are y'all really running into problems? I'm gonna up the output of my stream a little bit. We'll add it to maybe 43. There we go. Let me know if that helps. Maybe that helps. I'll unplug my mic and plug it back in too. There we go. So yeah, we got Chicago PMI coming out. Chicago PMI coming out. Let me watch this on my phone to see if you guys are telling me the truth. Yeah. My stream is running super smooth. Yeah. All right, cool. Hey, market's bouncing right at that 20 or 630 level. Yeah. All right, cool. Hey, market's bouncing right at that 20 or 630 level. Yeah, my stream's super smooth, guys. I don't know what y'all are talking about, bro. The beard is choppy. Bro, how dare you? My beard. Hey, you doing okay? Yeah. Okay. Yeah, bro, my beard is great. Yeah, y'all hit the live button next to the play button. Yeah, y'all hit the live button next to the play button. It should make you call back up. Yeah, the stream is smooth. Yeah, PCE data is right here at the bottom of the screen. It came in at 2.6%. Last time was 2.8%. It did decrease month to month, which is obviously a very positive thing. It did go down month to month, 2.6 versus 2.6% expected. Last time it showed up at 2.8%. This is getting closer to the Fed's 2% inflation target. Yeah, so... yeah, I'm going to say this. If y'all lie about my stream lagging, I'm going to ban you. So we pump up from being flat. We have the consumer metrics. I can just get Pawn to tell me whether it works or not too. All right, so we are dipping down a little bit here though, guys. We're gonna get ready to day trade. Yeah, refresh YouTube if you need to. That's what a lot of people are saying. So some are telling me I am, others are saying I'm fine. All right, so look at this dip down here. We're at 26.18s, 26.20s. All right. Paying us all. No, it lagged for 30 seconds. I believe that about 5 minutes ago, but it stopped. I just listened to myself on my own stream, and I'm fine. Market didn't go up much because of personal income data, 0.9% from 0.3% consensus. Yeah, so again, we had a lot of data come out. We had personal consumption data, core PCE flat, 0.3%, personal income 0.9% versus 0.4%, personal spending minus 0.2% versus a positive 0.1% expected, PCE 0.3%, PCE year over year 2.5%, core PCE 0.3% as expected, 2.6%. So again, I mean, I guess I could consider this a win. I told you guys I thought it might come in as expected. And that's what we did, but that's not a crazy thing to predict. I don't know if I can really celebrate that again. Yeah. Do you think Nvidia is oversold considering the earnings report? I don't know, brother. Do we really believe what they say? Inflation is measured how? Personal consumption data. Yeah, so it's measured in a lot of different ways, mostly personal consumption data. PC flat, not much work, not the catalyst that could pump the markets as long as the tariff thing. Yeah, the market's down a lot. Again, I'm not really the most optimistic person. I think we dropped a lot yesterday. I don't think this data is enough to save us from that market. I really don't. I don't think the data is down enough to save us from this market. I think, when I look at the Fed decisions here, when I look at this here, check this out. So look, 94%. Still pretty likely that we're gonna pause rates next month. But this did increase. Again, yesterday this was at 2.5% right here. 2.5%. Today's at 5.5%. This was at 98 or 97.5%. So this has gone up overnight. This one right here has gone up. And so the likelihood of a rate cut next month is gone up a little bit. It's still not probable. It's still not likely, but it's more likely and more probable. And yeah, look at the market come back down. Again, I'm not really thinking this is going to save the market yet. Bitcoin pulling back a little bit, but still up from this report. Bond yields have kind of stabilized back down some. So neutral in this sentiment is negative. It's not that it's negative. I don't think it's negative per se. I think the market is in bloody red momentum. I think the market's dropping fast, and it's been dropping fast for a week or two now. I don't think the PCE data was good enough to save us from the bloody red action yet. At the same time, though, you could argue extensions on the downside and that there's justification for a bounce. That's possible too. I just don't know if it's enough to save us. I think something that would save us from this report is like super low inflation data. And really, we got like flat data. So it wasn't enough to save us here from the bloody red action, in my opinion. I might be wrong, though. The market might just rip up. The extension is definitely on the downside. We're down 7.5% over the past couple weeks. So, maybe it's longer than that. We're down 7.5% on the NASDAQ since... Yeah, we're up 7.5% in the last... We're down 7.5%. Or no, we're down more than that, actually. Yeah, I mean, we're down 7.5% over the past, like, 10 days, 8 days. Yeah, the tariff news incoming next week. The date of the tariff impact is on Tuesday of next week, so it's on the 4th. And then again, like Wednesday, we got non-farm payrolls, unemployment data on Friday. Wednesday, we have non-farm employment. Friday, we have non-farm payrolls and unemployment. So, all right, let's start to day trade. I'll day trade a little bit. I'm going to short this. It's kind of crazy to short it here, but I'm going to take one little micro contract and then maybe add to it if we get some good stuff. I think we're in a little downward trend, and I think up is a little bit too much right now. Yep. Half off just now. There we go. I'm going to add a little bit more here. There we go. Take a little bit more. All right, so we just made 30 bucks, give or take, a little bit, maybe a little bit under 30. Probably could have held it a little bit more, but that's okay. So you can see how similar this is to day trading stocks, guys. You see how similar that is? Very similar. Yeah, Tariff Tuesday next week. All right, guys, I'm going to end this poll because now we got... And again, we came in flat. Do you guys think I should bet on the interest rate? Or do you guys think I should bet on inflation data through, like, derivatives? Like, do y'all think I'm accurate enough to bet on it? Of course, haters are going to be like, no, But some of the... If you're not a hater and you don't think I should, let me know. I've just gotten a lot of them right. Or I've gotten them close enough to where... Part of me thinks I should. Anybody that watches my CPI streams knows. And so I'm just wondering if I should try to play that edge a little bit. What do you guys think? Well, no, you can find derivatives websites. Yeah, the second I do things, yeah. This is a funded account program. So they give you a demo, test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. It's just a great way to test your skill, learn how to trade. And if you're good enough, a lot of people use this to like make money. But again, they're an affiliate of mine. I'm biased, of course. If you want to check them out, link is in the description. But there's no PDT rule. Like if you want to day trade stocks, the PDT rule restricts you so much in that like you got to put up 25K plus in a margin account to be able to day trade more than 3 times a week. And so most people like they have to put up it's a ridiculous rule because forcing new traders to day trade a $25,000 account to be able to day trade freely. And anybody that understands day trading knows that like 3 times a week is not enough to play out. Like the variance is so high, you need a large sample size. 3 times a week is just nothing. And so forcing new traders to save up 25 grand to be able to day trade actively is like forcing a 16-year-old learning how to drive a Rolls Royce. It makes no freaking sense. Absolutely no sense. The liability is much larger, but they say it's protecting traders when it's not. That's why the futures market is nice, is because there's no PDT restrictions. I can basically day trade. This is the QQQ price action. If I put the QQQ up, it's the same price action. Like you can kind of see this here. Big upward move, consolidation on the downside, big upward move, consolidation on the downside. Same price action, but I can day trade this like on Top Step, zero commission, no PDT rule. And look at the levels, guys. So one thing I do every morning is I look at levels. I look at levels. I try to see if there's, some justification in finding a level, and I look for multiple confirmations. And look at that level hold right here. So this is why you watch levels, chat. They're not going to be perfect. Like some levels are not going to hold very well, and others are, but they're going to guide me on spots. Also, another interesting part here, guys, is yields have come down a little bit. So yields have settled down after spiking up originally. They've settled back down. 10-year yields currently at 4.2%, 4.25%. So. Well, the real reason, if you want me to be honest, is so that the banks can sit on your money and earn more interest. That's what the PDT rule's for. They want to sit on your money and earn more interest. And so they don't want you using that money too much because, then they can't sit on it. And so they want you to sit on it. I mean, most day traders lose. Don't get it wrong. Like almost all day traders lose. Again, I have no freaking idea what I'm talking about. Don't copy me. Most day traders lose. I have no idea what I'm doing. If you copy me, you might lose. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Don't copy me. Yeah. All right, guys. So we're still breaking down here. So we stopped at that level we held. Now we're coming underneath it here. And so the thing to watch when we break under a level like this is, does it turn into resistance? We made a little bit of money. Look at yields dump here too. So yields are coming down. Yields at 4.24 or 4.24%. Yeah. Yields are down, which means interest rate sentiment is down. I guess probably because of a little bit more reasonable inflation data. Maybe some people thought we'd show up high. And in that regard, the likelihood of rate cuts increases with more reasonable inflation data. If inflation is under control, the Fed in theory could cut rates without as much fear. So that's probably why rates are going down. That's probably why yields are dropping, is because of the sentiment behind interest rates with inflation data coming in a more reasonable spot. No, these aren't Fibonacci levels. These are self-drawn levels. Now, they might correlate with Fibonacci's, but anybody that watches my stream knows that I don't look at Fibonacci's. I like drawing the levels myself, based off of shorter-term, like recent spots, because I'm short-term day trading. I'm not day trading for very long, so I got to look at the most recent levels to determine what I want to do, versus like longer-term levels that, if I'm taking a longer-term trade, might have a little bit more weight, if that makes sense. The wolf of YouTube? I'd say more I'm the German Shepherd of YouTube. Yeah, 3 trades is ridiculous, dude. It really is. And the ironic thing is that they say they're helping traders. Like, you know how many people are going to deposit 25 grand trying to day trade that? in stocks. It's ridiculous, dude. Of course, like, terrible thing. Like, of course, nobody should be depositing 25 grand trying to day trade stocks as their first day trading account. You're just going to lose all of that. But the problem is that, again, people get involved and they think they're going to be some guru, savant, genius day trader. Look, I can't even, like, I thought I would be too. I went and saw the movie The Big Short and fell in love with trading and finance in the stock market. I really did. I was a poker player, like a chess player beforehand. I go see that movie and I realized you can make money, like, strategics. Like, I like strategy. You can make money using strategy and trading, of course. And so I saw that movie, saw it in theaters, came home, started researching it, looked up freaking Tim Sykes, financial freedom, millionaire students. And I thought I was just going to be, I never took their courses or anything like that because the penny stock variance is so high that, like, I can say whatever I want about the best pattern ever, but, like, the variance is too high to, just not my thing. Maybe some people can make money doing it, but yeah. So I saw that movie, came home. I had, like, this is before I really had any money. I told people the other day when I got with my wife, like, somebody tried to imply that my wife was with me for the money the other day. And what I told him was that, dude, when I got with my wife, she subsidized me for a while. Cause, like, I moved to Houston with her and I didn't have any money and I didn't have a place to stay here. And so I got to, I stayed with her. She subsidized me. I was broke. And really, like, at the time I saw the movie The Big Short, I didn't have that much money either. Like, I was a real estate agent at the time. And so I had some money, but I had like $4,000 saved and it was not a lot. Market's still flushing down here. Yields are still dipping down too. Gold is falling down as well here. But I didn't have that much money, and I ended up depositing it all into a very sketchy brokerage at the time. And I thought I was just going to be some day trader. I thought people were going to be like, dang, John, you're a genius day trader. I was just going to make 40 grand casually out of 4K and turn it into a lifestyle. And of course, I just ended up losing the whole 4K in like 3 weeks and just almost crying about it. I remember I wanted to cry. If Kara wasn't around, I might have cried. And yeah, but that built risk management at least, so that's good. I am watching I'm watching the 10-year TNX yields. Until that Aquafina money started rolling in. Yeah. Margin Call is good. I would say The Big Short's a better movie. I would say I said this the other day. Margin Call, better script. Script of Margin Call is fantastic. It's just a great freaking movie, bro. Great freaking movie. But it's more doom and kind of sad and gloomy. Versus The Big Short, which I think is more educational and just a better movie overall. But the script of Margin Call is great. I just like the vibe of The Big Short more, The Belgian Malinois of YouTube. And so I guess the overarching point I always try to make, I didn't actually cry, but I freaking wanted to. Again, I'd be honest. I don't cry much. I cry maybe I cry. Everybody cries. If they say you don't, you're lying. I probably cry maybe once a year, I can't remember the last time I cried, to be honest. It's probably about a year ago. Maybe it's time. If I do cry, I'll cry on stream. You're still together because you're honest and open about your finances? Well, yeah, I mean, we're married. I've been married for 14 years. So, I mean, we share everything now. The original Wall Street movie is good, but, yeah. I cried once. How many times do you cry a year, guys? Let me know in chat right now. Big minds want to know. I'm not going to say how old I am, when I got married. I'm not going to say any of that stuff. We were young. Got married at the courthouse. Yeah, YouTube's lagging. I don't think it's on my end either. Yeah, I don't know why it's lagging. I don't think it's on my end either. Like, I'm watching a stream from my phone. My internet's fine. My stream's running perfect. So this has got to be on YouTube's end. I would just maybe refresh the stream. Yeah, I really don't know. It's got to be YouTube, I think. Yeah. Why is the 20-year bond going up right now when the 10-year is going down? So, Andrew, I'm going to explain to you a correlation. It's important for you to understand this correlation if you want to understand economics and finance. All right, this is the biggest three things for you to understand. And if you understand everything I'm about to tell you, you'll understand economics to a certain degree, especially in terms of fiscal and like U.S. policy financially. Bond prices like TLT and yields inverse each other. Supply and demand, brother. Supply and demand. If yields go down, the underlying bond prices go up. If bond prices go up, the yields go down. Okay, so bond prices and bond yields inverse each other per supply and demand. Okay, interest rates and anything that might signal a more dovish or hawkish Fed has an influence over yields and bond prices. Okay, so interest rates and yields follow each other. Yeah, it's weird we're lagging, guys. Let me exit out of some stuff again. I don't know. We should be okay. Yeah, what's weird is mine's running fine. We're not dropping any frames on my end. It's got to be YouTube. Maybe I'm going to put up 3 charts here. It's got to be YouTube, though. Again, we're not really dropping any frames or anything on my stream. You're good? Okay, so yeah, Andrew, so listen, interest rates, so like if anything signals lower interest rates, which is a dovish Fed, right, yields are going to follow it. So with yields going down, this essentially means lower interest rate sentiment. So if T and X is going down, which is yields, it means a lower interest rate sentiment. It means they're expecting more probability of cuts. It doesn't mean they're probable, but they're more probable, if that makes sense, right? So anything that influences sentiment and interest rates, yields are influenced by it as well, and vice versa. So if yields are going down, that means sentiment around interest rates are going, like, they think lower interest rates is more probable. Now, with those three understandings, again, yields and bond prices inverse each other. If bond prices go up, yields go down. If yields go up, bond prices go down. And then interest rates and yields follow each other. So in that regard, bond prices and interest rates inverse each other. Okay, so that's an important understanding to have here. Then when you understand, like, the Federal Reserve is going to raise or lower rates depending on what inflation is. If the economy is weak and inflation is low, they're going to cut rates more likely, because cutting rates saves us from a weak economy. You know, the risk of cutting rates is inflation. So inflation and interest rates have a positive correlation. Okay, so inflation and interest rates have a positive correlation. So what does that mean? That means inflation and bond prices inverse each other, right? So because if inflation goes up, the Fed is less likely to cut rates, because they can't, because cutting rates might make inflation worse, right? So there's a lot of correlations, but understanding all that stuff, if you can understand it, I know it sounds kind of crazy, but if you can understand those couple correlations, it'll become a lot easier to predict economic policy based off of these reports, right? Like PCE coming in reasonable means what? It means the Fed is more likely to be able to cut rates without fear. Why? Because inflation was more under control. If inflation's more under control, the Fed has more of a green light to cut rates, versus if inflation shows up super sky high and inflation spikes, what does it mean? it means, you know, if inflation shows up and it's sky high, it means the Fed has to be a little bit more careful about rate cuts, because lowering rates might make inflation worse because people have cheaper access to money and they tend to spend more when rates are low. So that's the way to understand it. Now, inflation is important to watch, but yeah, the stock market, finance, futures market, it's a little bit of a different animal versus the economy. They influence each other to a certain extent, but they're definitely not a perfect correlation. Yeah, all good, Andrew. That makes a lot more sense. Yeah, it's all good, brother. I'm just trying to help people understand, because if you can understand these things, it becomes easier to watch, gauge, predict economic policy, and make money. But you got to understand this stuff. I day trade, but I'm really an economist and a long-term investor. I love day trading. I day trade live every day, but I also much more like economics, federal policy, long-term. John, genuine question. If bonds and yields are always inverse, why not only talk about one of them to make things easier, unless you can sometimes not be the opposite? What do you mean? I'm not sure what you mean by that, Fabi. Yeah, I can't control YouTube. Again, this isn't me. If it was me, guys, I would see dropped frames and lag on my end on OBS, right? I don't, because it's not me. It really isn't. Other people have said they saw it in other channels as well. So yeah. Hey, thank you, Sky. Inverse Kramer. Yeah, that's the way. It might be the way, brother. Instead of studying 3 correlations, we could only watch yields and rates. For example, knowing bonds will always do the opposite. Well, yeah, I mean, you can watch whatever you want. You can only watch one of them if you want. It's not like it really means too much either way. I'm just explaining, the different correlations so people can watch whatever they want. It doesn't really matter which one they watch. You can watch yields. You can watch interest rates. Yields are going to be a little bit better, though. Interest rates are going to be lagging, if that makes sense. Interest rates are going to be less, not lagging, that's not the right word. Interest rates are going to be less real time. You can watch bond yields in real time and how they react to economic reports versus watching interest rates. A little bit harder, so I just keep yields up usually to watch that. Bitcoin moving up to 82.5K. Hey, thank you, Bunny. Appreciate it. Yeah, close and reopen is, a lot of people are saying that works too. Yeah, would it be good to watch short-term yields to possibly see where the Fed, and watch long-term to see where the money's heading at least? Yeah, you could do that too. That works fine. Yeah, market's never going to go to zero, though. Like, I had somebody that told me before this big AI run about 2 years ago, somebody told me that the SPY was going to drop 80%. And I kind of made fun of him at the time, and justifiably so, I think, because, again, the SPY was at 500 at the time. Or wait. An 80% decrease would mean the SPY was at $100. I think the SPY was actually at like 4 something. So I remember it being like $80. And I remember being like, you think the SPY is going to drop to $80 a share, bro? Maybe it was the Q. But yeah, like, so markets are going to dip. They're never going to dip that much. Not in my opinion, right? Maybe I'm wrong. Anything could happen. Nothing's definitive. There's always risks. But market's never going to drop anywhere close to 80, 90%. It's just not going to happen. If the market ever did drop that low, we would have such turmoil, not just in finance, but in the world, that it wouldn't matter. And the priority would not even be the losses that you're taking and stuff. It would be safety for everybody, right? Like the whole world could turn to craziness if that happens. And so you just got to understand the super low probability. Another thing, like, people will criticize bonds. And I'll be like, hey, you can buy bonds. It's guaranteed returns. And they're like, well, what if the government fails? It's like, well, bro, if the government fails to a point in which they're not paying out your bond payments, you got a lot bigger problems than not getting your bond payments, none of it will matter anyway. Paper money will be useless. So just such a low probability thing, it's not even worth speculating on, I think. Michael Burry bet big against the market. Yeah, he lost huge sums of money, didn't he? He bet big on the market. Just to put this into perspective, I hear Michael Burry a lot, and I love The Big Short, right? I love the movie The Big Short, right? But Michael Burry bet against the SPY, or bet against the market like this. Michael Burry bet against the market here, guys. Right here is where Michael Burry bet against the market. It was somewhere. I think it was right around there. I'm not 100% sure, but I'm pretty sure Burry, just for all the Burry lovers. And again, I think Michael Burry's smart. I think the problem with Burry is that he's too biased on the bear side. He's way too bearish. Why is he way too bearish? He's way too bearish. And I get it. Michael Burry, look, I'm pretty sure he got in short somewhere like around here. Which obviously, not the best short entry there, brother. Not the best short entry. The problem with Burry is that he predicted the Big Short, and he told everybody it was going to happen. And some of his best friends and partners in the world sued him, even though he made them billions of dollars, hundreds of millions, if not billions of dollars. He made some of his partners, and they were so convinced he was wrong that they sued him and destroyed their relationships with him, even though in the end he ended up netting them hundreds of millions, if not billions of dollars. And so when the whole world thinks you're wrong and you turn out to be right, in a situation like 2007, 2008, you might be skewed to be skeptical against big money and finance after that. And I get it completely, right? The issue with Burry since then, though, is that he has wildly over-predicted crashes. This man has predicted some big monstrous crash at least once every 2 years. And again, he's been wildly wrong. We had a Fed meeting a year and a half ago or 2 years ago in which Burry said, sell. He put a very cryptic tweet out that said, sell. And basically everybody was like, yeah, you see Burry's tweet. And then the market just ripped up, just flew up from the Fed meeting, just flew up huge percentage points. Burry ended up deleting his Twitter and deactivating it and then apologizing later on for it. And so Burry's a very smart guy. He wildly overpredicts crashes. And again, my issue with it is that it skews people against long-term investing, which is, the biggest statistical edge the market ever gives you. If you DCA long-term into indices and you sit on them for decades, you're going to make big money, almost certainly. And so, I think people like Burry are just too bearish at this point in time. And you got people that love Burry that hang on every word he says, I see you, Lolo. Have a great day. Yeah, again, it's not my end. Again, guys, like, I've been looking at my frames on OBS, like, just to put this into perspective. I've been looking at my frames on OBS. My frames are clean here. Like, I'm running at 60 FPS. We're running at only 3.3% CPU usage. We're running at 48 kilobits per second, right? So my numbers are pretty good here. Like, and again, while everybody's saying we're lagging, these numbers are steady. And so again, which means it's YouTube. It's not my end. I can't do anything to fix it because it's not on my end. I'm sure if I took my internet right now, this was my internet yesterday, just to put this into perspective. Like, trust me, it ain't my internet. Yeah, this was my internet yesterday, guys. That's upload and download speed. We're running at 1200 megabits per second upload and download. 2 ping. So we're not lagging. Again, it's not on my end. All right, guys, we're in a very sideways range here. Very sideways range. Quantum stocks, I think they're pulling back, aren't they? Like IONQ still dipping down to 23s. Yeah, IONQ and quantum stocks are dipping down with tech. People that praise others' words over their own usually can't think for themselves. Yeah, I mean, the issue that most people face, right? Like, some of my best trades, and I've said this a lot, but it's important for people at home to understand this. Some of my best freaking trades in the world, right? My best trades in the world are trades in which I jumped in them and people make fun of me for taking the trade literally as soon as I got in, right? I bought Target at like 105. Like, look, I'll show you guys some of these. I bought Target at about 105 over a year ago, down here on this big dip in 2023. I bought Target literally around here somewhere. I can't remember where exactly. And when I bought it, so many people made fun of me for taking the trade, telling me it was the worst trade ever. Target ended up bouncing all the way back to almost 180, over 180. And again, all the people that made fun of the trade, silence. Crickets. This, you know, as it's bouncing back. I bought Disney over and over again over like a 3 or 4 year period. Every time Disney would dip down to like $75, $80, I would start buying it up down here, and sure enough, everybody would make fun of me. They would tell me it's the worst trade ever, all this different stuff, and then again, it would almost inevitably bounce back up to 120s every freaking time. And again, when that would happen, freaking silence. And so some of my best trades, I bought UAL after 2020 when a lot of stuff was crashing down here. I made a video about it, about buying United Airlines at like, I can't remember where it was. I bought it at like 20 something dollars way back here during the 2020 crash. And I made a video about it. And then pretty shortly after I made the video, people would go in the comments and make fun of me being like, this is a garbage call. It's going to fire and burn down there, like all this crazy stuff. And then pretty quickly it ended up ripping up hundreds of percent in like within a year. And again, the haters deleted the comments and then crickets. And so I'm not bragging. Some people that are big mad or about whatever, probably because they went short on some of these. I'm not bragging. I'm trying to tell people it's important to understand you have to tune out other people, especially in trading. Trading is so subjective that, especially when it comes to like swing trading, especially, but day trading as well. You get some people where you take a day trade and they're like, oh, this is a garbage trade, bro. And then the trade will just go super in your favor. And again, then they're silent. And then if it doesn't go in their favor, they'll sit there and be like, see, I told you so. Like, people are desperate for validation online. Profitable traders generally are not that vocal about criticizing other people's picks, trades, strategies, whatever. Like, profitable traders are usually not that vocal. It's usually like the rookies that don't really know any better, that they think they don't understand variance, that are the loudest. And so you just want to learn to tune those out, because that's a huge aspect of it. Like, if you announce your trades to anybody, you know, it's probable that you're going to deal with something like that eventually. And so you just got to learn to tune it out. And And again, ironically, a lot of the people that criticized those trades ended up like deleting their account and not really ever, like, again, they don't show their face anymore because they know, like, they know. The reason a lot of people don't like those trades is because they get over wrapped up in like political stuff. Like, they get involved. Like, I don't care about any of that stuff, dude. I'm here to make money. Disney, honestly, is one of the easy. I'm not even telling you to buy it, but like, if anybody that's watched my stream long enough remembers me telling you guys about this correlation. What was the correlation? When Disney starts to get down here, like, historically, it's bounced there over and over and over again, and it gets right up to 120, which is where I generally take profit. You know, super easy, like super easy correlation to see long term. So swing trading wise, very simple to make money over on those type of trades. I haven't been doing it as much lately. I haven't been watching it as much, but very easy to make money doing that. Profitable traders don't have time to be keyboard warriors. 100%, man. It's usually like, you'd be surprised how much people let bitterness like lead their way in life. Like, I've disliked people, I've disliked channels, I've disliked YouTubers, I've disliked people in general. I don't ever dislike them enough to go create fake accounts and troll them in online chat rooms. Like, that just seems like a sad existence, to be honest. And so, you know, I think if those people just spent a little bit of time focusing on themselves, they would be successful. But instead, they let, like, I truly do believe, I've said this over and over again, but you get what you put out there. You put out negativity, harassment, you're going to get it back. You put out goodness, you're going to get goodness back. I try to be good to people, but I'm flawed, of course, too. I'm definitely not trying to be self-righteous. Top 3 most flawed people in the world right now. Is IONQ under investigation? Fun trading week. Yeah, I mean, Warren Buffett talks about this, right? Like, do you go... Can you justify the business in your head? Like, an example of this, if Target, every time I go there, is packed, super busy, lines are long, they're making money. And so if they look like a cheap entry relative to their long-term chart, their PE ratio is low, I don't mind buying that up. I really don't. Same thing with a lot of different companies. And so it just depends on, do I know them in real life? Is their business strong from what I can see out of my own eyes? Not even looking into their metrics, like, is their business strong? If that's a yes, then I pivot to looking at their metrics. I look at PE ratios. If it's under like 35, I might be okay. You know, what's the average PE ratio for that company over the last 10 years? And then what's the PE ratio now? You know, there's a lot of little tricks you can use to try to figure out value, fair value for it. Yeah, I mean, you can ignore them and that's good, but sometimes people like drama as well. So people, they're really helping build stuff. They're like helping build my channel. I'm sure I'd be a lot more loose with how much I streamed if I didn't have to show the haters how much we're growing on here. So I don't know. I think they end up fueling people more than they end up hurting them, ironically enough. Again, do we go up or down at the opening bell? I'm going to do a poll here, guys. Are you bullish or bearish on today's open? Market just cracked pretty close to lows. All right, guys, are you bullish or bearish? It depends. It depends on how easy it is to make fun of them. You know, I like making fun of a troll too. Like, if they're calling me dumb, or if they're trying to insult me and they don't know how to spell loser, then it's almost too easy. I can't help but be like, you know. All right, so look, we're breaking down. Look at this rejection here, 600s. It looks like 604s. Whoa, 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 whoa. Look at this drop, guys. Something happened. This looks like a fundamental news release of some sort. Let's see. Okay, so French President Macron says he left Washington with very little hope on progress on tariffs. Says tariffs are bad for everyone as they are inflationary. I don't know why we had this big drop. I don't see any recent news. Oh, is he really speaking again today? Is he speaking again today? Yeah, I don't see him speaking. Yeah. I hope he's not, dude. He speaks too much, to be honest. Causes too much volatility in markets. Hard to stabilize things. And the Nasdaq's down big. That was a big candle, but we kind of retraced that whole thing. These levels, though, I mean, 54% are bearish. All right, guys. And again, we're day trading on Top Steps funded account program today. This is a 50K funded account. There's the opening bell. Market's dipping at the opening bell. Look at this crack here at 2056, 25.65. Tapping that low. Looks like we're going to break the low, to be honest, but I'm not 100% sure. It looks very probable to break this low, but I might be wrong. Don't copy me, not an investment professional. Maybe not. I don't know. Maybe not. We're retracing some. Palantir's popping back up some. Maybe I was wrong, guys. I don't know. It looked probable that we were going to break that low. And then we still have time to, but Nvidia's bouncing up. It's dragging markets up. Let's put up Apple. All right, so now we're back down. Yep. There's the low break. It's not the low of the day. Now we just broke the low of the day. So yeah, market broke lows. Not a shock, but bloody red action continues on this Friday. I will short if we pop up, but I got to give it some time. And again, I'm going to wait a couple minutes and let the opening bell volatility play out. Again, if you want to check out Top Step, great way to help support your boy here on this channel. There's no PDT in futures. They give you a demo. They test your skill with a demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, $50 basically for the base one. If you pass it, you get a 50K funded account with a 90% split. If you fail, you only lose $49 for the base one. No PDT in futures. You can day trade the S&P, the Nasdaq, the Dow, the Russell, gold. Some currencies, patterns, and trading are very similar to day trading stocks. No PDT rule. They've paid out almost $200 million in 4 years. They've been around for over 12 years. They're the most legit one in the world, and the conditions are some of the best in funding. Zero commission on Top Step X, guys. Look at this dip, though. Market is down. Is it a short the bounce situation here? There's the link in chat if you want to check it out. Again, I'm trying to let the market play out some. Understand all these rules on screen. CFTC 4.41. Hypothetical or simulated performance have limitations. Get my plug out the way early while we're waiting for this 5 minutes. I should have shorted this pop, I think. Still looking kind of red. I'm going to add some to this. We're short. All right, so we just made about $20. The momentum is just too strong. I'm definitely not going to go long here. So we're up. We got a nice little cushion on the day so far. So solid cushion. Wow. Dude, Apple, guys, just retraced to 230. Apple just retraced to 230, chat. Is there some news around this? I don't know if this is a real move or not, but that's a weird candlestick for Apple here, guys. Nvidia's starting to rebound, though. I'm really kind of curious about buying this dip, but the momentum's too strong. The only thing is that Nvidia did bounce back some. Microsoft dumping down here. Meta flying down too. Wow, guys. Tech is bloody again today. Nvidia's fighting back though. Again, I'm kind of thinking about buying the dip just based off of what Nvidia's doing, but I don't know if Nvidia can save the market. Every major tech stock is down pretty significantly right now. Q is down to under $500, 497s. I'm gonna buy this dip. It's kind of risky, but it's I'm gonna look for a liquidity grab here. Made a little bit, not as much as I think I could have. I think it's still gonna go up some more, but yep, there's the pop. That's all right. I feel like raspberries, you know. It's all right. When you're right, you're right. I just mismanaged the trade. Yeah, baby hands. Listen, just to be fair, okay? If I'm trading against the trend like that, I gotta be quick. It retraced right before I exited, which made my gain much smaller than it would have been. And so if I'm attacking a bounce play, I've got to be very tight. And so even though I missed out on some gains, I was right about the direction. It's confidence building for sure. Look at this level. See, my resistance levels are justifiable too. Like, look at this spot. I don't know if it's gonna hold, but Q's getting close to 500s. Nvidia's still bouncing back though. I mean, the extension's definitely on the downside. Alright, so we are rejecting some now. See, this is a weird spot. I don't know where to go here. We tapped the 200 exponential. It depends on if Nvidia bounces at the VWAP, which it looks like it kind of is. Q with a straight V recovery. Well, Palantir back up some too. A lot of stuff V-shape recovery right now. gonna try buying this. We'll see how it goes. We'll add some to it if we can. We got a cushion that we can play with today. It's a little risky, but it's all right. I took half off, took the other half. I just made about $40. Up about 100 on the day now. All right, so we are rebounding back, but pulling back short term. All right, so look at NVIDIA dip here. I'm gonna short this now. We got a really nice breakdown. I'm trying to hold. We barely made anything, but it looks like we got out just in time. Apple's still heading up though. So we're popping up a little bit. I kind of want to short this. We're up about 100 on the day. Yeah, I'm talking to AI is what I'm actually doing. I'm already up 100 on the day. I'm trying to take time. I wanted to short it, but I'm not really getting that entry. Maybe I could have shorted it up there. But I think I gotta just chill. All right, so we're gonna get our x.com post out the way, chat. So again, if you haven't already, all right, guys, so we got our post here. If you want to give me a follow, you know, we got some breakdowns. Give me a follow on X. We do a daily post updating you guys on everything going on in finance. There's the link right there. All right, let's watch Nvidia and Apple. They're both coming back some. I'm gonna wait and see if we get some confirmation and trends first before I really take any positions here. All right, look at this big rip. Oh yeah, we got PMI data coming out in 1 minute, chat. I forgot about manufacturing and services. I don't think it's huge. Let me see. So whatever this is, it's not a big report, right? So this is not like some monstrous report that's going to powerfully move markets. It's just not. It's not a big report. I think it's Chicago PMI, which is a pretty much nothing report. But it might move stuff. We'll see. It's expected at 40.5. Higher is stronger in manufacturing. Lower is weaker in manufacturing. It's expected at 40.5. It drops in about 20 or about 30 seconds. So we'll wait and let this play out first. Again, give me a follow on X though. Completely free. Doesn't cost a thing. All right, here we go. 10 seconds. 10 seconds. And here's the release right now. 45.5, higher than expected. Stronger manufacturing data. 45.5 versus 40.5 expected. Stronger manufacturing output than expected here. Market doesn't like it. Maybe it means more, maybe it means more inflation problems. All right, guys. Yeah, market didn't like this, I guess. More inflation potential maybe here. So we got this level. We get under these two levels, I'm going to start shorting again. But we need to, if we get a head and shoulders on the 200 exponential, I'll short that as well. It depends on what Nvidia does here. Nvidia is right at the top of the range, right around highs. Apple started to fade back too. So if we can hold under the 200 exponential and kind of rebound back into this, I don't mind shorting it, but we got to wait and let this pattern play out first, because if Nvidia rips over highs, it might just rip this pattern up and render it obsolete. So yeah, like I said, the Chicago PMI is pretty much nothing. Yeah, here it is right here. Nvidia just ripped over highs, guys. Palantir flying back up too. Watch Nvidia. Nvidia's right there. Apple's right there too. I'm kind of torn. I think technically we look weak like this, but I also think like Nvidia looks strong, and so does Apple here. And so those two things scare me enough to where I'm kind of neutral. I don't know which way we're going to go, and I think the market might be feeling the same way. Looking at our poll here, 53% were bearish into the open, 47% were bullish. No, today's not quad witching day. quad witching day is going to be March 21st for the next one. And really it's triple witching, but it's March 24th. March 21st. Alright, here goes NVIDIA. Yeah, so this is strong looking. All right, so we are rebounding back up a little bit here. Let's see if we hold. I don't mind the cup and handle play out pattern here if we get it, but we got to get it first. All right. Yeah, I'm watching NVIDIA, guys. Again, I'm kind of like, I don't know what we're gonna get here. Like, I really don't. I don't know if we're gonna get bullish or bearish action or not. Yeah, we did an updated X post, guys, again. So give me a follow at Beginner Trades. I don't have a golden YouTube button. I got a silver one. I'm gonna short this. We got a cushion, so I'm gonna be kind of loose. We're also at the 200 exponential, so I can give it time, I think. All right, we took half off. Didn't really get much out at that, though. He's trying. Lock that profit in, nice. All right, just made about $22. Yeah, we got a little pop. See, we're right at this triple quadruple top right here, though, and so I don't like it enough to try to short. There's too big of a line in the sand here. It's not really contemplate. Like, this little rebound's definitely not enough to save us, but again, everything's not always like heavy weighted to PCE either, though. So like PCE data, it influences the market, but it's not the end all be all, if that makes sense. Like there's a lot of stuff you got to factor in here. Yeah, we're kind of choppy though. I don't really want to mess with this. All right, so we're kind of waiting here, guys. I'm going to switch from this to one of my combines. And we're going to trade some range here. Since I don't feel like giving too much back, I'm going to short, and we're going to keep a long-term short position based off of this head and shoulders S pattern. And we're just going to go full size, see if we can get funded in one swing. Okay, here we go. Hey, there's one. All right, so we got one. Let's try number two. The goal is to get it to $1,500, and we just got it there in one swing. Head and shoulders like pattern is what I'm looking at. Again, this is a challenge account, so if I get 1,500 Monday, then I'm funded in a 50K funded account. Take one contract and we're going to slowly add to this because I think this looks weak. Don't you hate it? All right, let's see if we break. I didn't really get filled there. I took two off so I can add some on a retracement back, but I hope we continue down. All right, we're going to use the cushion that we have to see if we get a flush down here now. I think that might be it too. Let me see. Almost. All right, that's two. All right, so that's two funded accounts in two trades. We got two funded accounts halfway there. We'll see if we can hit that tomorrow. The head and shoulders worked. Yeah, so I'm pretty sure I got the new dashboard with this too. I'm gonna try to go ahead and see if I can get one more here. The goal is to have 5 funded accounts. 5. So I have 3 right now. All right. Here's 2. Bad feels on that, but that's okay. I'm still optimistic. All right, well, we're definitely not looking as good for this big pop back up, but we'll give it some time. I still got a little bit of room, but it's not looking good for this one. Yeah, so I went 2 out of 3. I think I'll stop there. Yeah, I think I'll stop there. So we did pretty good today. Pretty good. All the way around. I gotta make sure I don't accidentally trade some regular NQ contracts. Yeah, so Top Step's new rules are really cool too, man. So if y'all haven't seen the new rules, let me show you. Pawn sent them to me a couple days ago. All right, so now on Top Step, let me break down the new rules here. There's going to be a reset bank. So every time your trading combine rebuilds, you automatically bank a reset. You can use it at any time on any active account. They're now going to have real-time trade processing. And so trades and performance stats are going to update instantly in the new dashboard. So when you reach your target, you can activate your Express immediately. No more waiting. Payout amounts are deducted from balances instantly, allowing you to keep trading without delays. Resets extend rebuild dates. So each reset adds 30 extra days to your rebuild date, providing more time for you. You can view real-time updates on trading progress and metrics. You can update your details, track payouts, manage accounts. Simplified tools for managing resets, rebuild dates, and payouts. There now is KYC verification, so you can submit and track, know your customer documents directly, and you can view certificates and payout statuses in the new dashboard. So really nice. Again, they're an affiliate of mine. I'm biased, but they've got a lot of really cool stuff. I think in order to take advantage of this, you have to buy a new one. So you have to buy a new combine. And so again, if you want to buy a new one, here's the link. They are an affiliate of mine. I am biased. I can't guarantee anything. Again, they give you a demo, test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. In this case, the base one's $49. You pass it, you get a 50K funded account, 90% split. You fail, you only lose $49. It's a great way to learn. Teaches you how to follow rules. Most day traders lose. In order to get good at day trading, understand CFTC 4.41, all this stuff, number one. But in order to get good at day trading, it really is like Pavlov. It's like conditioning. You have to do the right things over and over and over and over and over again. And that conditions you to make the right decisions in your trading. Most people, the mistake they make is that they deposit 5, 10, 20, 30 grand and they try to condition themselves trading that type of account, and they lose boatloads of money doing it. It makes no sense. Instead, this gives you a way to condition yourself. You still have some pressure. It's not the full extent. That's what this is valuable for. And if you fail, you get a real-time practice account anyway. So it makes sense. If you want to check it out, here's the link. I'm going to get out of here, guys. I love you all. Y'all have a great day. Yeah, y'all be safe in this market, guys. Be safe. I'll see you guys later. Y'all be good. Have a great day. Remember, not an investment professional. Yeah, Richard, you probably just got to hit the live button next to the play button, brother. You're probably a little delayed in the stream. You got to just kind of hit live, dude, and you'll be all right. Yeah, y'all have a safe weekend, guys. I'll see you. I'll be back bright early Monday morning. I'll see you guys then. Y'all be good.